Welcome to episode 3 of Macro Top Checking with Drae. This one's going to be an extremely important and comprehensive and amazing video. I'm super excited. So I think this was 21st of July. So this would have been like a week ago. I basically explained that in the past, like most people, like most retail participants in this space actually, I would just cluelessly kind of guess when to exit. In fact, I would barely exit at all. And so one thing after making millions and losing millions, one thing I've learned is that it all means nothing unless you keep it, okay? Like, it all means nothing. I'm telling you, bro, you can make $100 million on paper, unrealized. It doesn't mean shit if you can't keep any of it or most of it. It really doesn't. So, as I said here, why not just cut through the noise and actually build a reliable framework? And it's important because, as I said here, man, like, euphoria is coming. And in the midst of it all, when things are going crazy, staying objective will indeed be the difference between walking away very rich or round tripping it all. And so me personally, man, I feel grateful that, you know, I've had many different sort of cycles in the space now since 2021. We've had already a couple alt seasons in between, and you tend to learn different lessons between all of them. And for me, the first few was more about how to maximize and make lots of money. Whereas now I've learned a lot about like the importance of keeping it and like actually catching the top, you know. Good entries doesn't mean anything if you can't have good exits. And so, as I said here, there's like a whole list of things we're going to be tracking. But since the 21st of July that I made this tweet, I've come up with a way more like comprehensive and like accurate list of things we can track, okay, in order of priority and stuff. And so I'm really excited, man. In this video, definitely still watch it if you haven't. But in this one, we're going to go over like a better order in terms of the most important things to follow in order and track. And a bunch of different things to keep in mind. Because here's the thing, guys, not everything is all about quantitative data. It's not all about the charts. Very often people forget that qualitative data, which is like words and stuff, right? Like that is very important too. And so a random example I could tell you right now before we dive in is, for example, when you start to hear your random friends talking about crypto, when you start to see a bunch of memes and like crypto gurus on Instagram or stuff like that, you know what I mean? And so, yeah, so as I said here in this post afterwards as well, like this post is basically a whole rant. Okay, look at this post as well from the 22nd of July. Shout out to the one chat that saved it. But this rant is basically how very often the issue with why most people round trip and hold is not just greed, but it's emotional attachment. You see, and so if you're getting emotionally attached to a coin, you're kind of doomed unless you figure out a way to make money while also still being attached. Because it's perfectly fine to have a thesis that you love, a thesis that in fact plays out. But just because a thesis is playing out doesn't mean it will always play out forever and never for decades to come, you know, or even for a year or two to come. But that said, you can still have a thesis and you can still believe in a coin and be attached to it, but still be really responsible and smart about how you de-risk over time. And so one little idea right here is like, look, man, like, leaving a 10% moon bag, a 20% moon bag, even a fucking 30%, 50% moon bag, as crazy as that sounds, it's still better than being all in, man. You don't have to be ever in the space all in or all out. You really don't. It's just about managing risk and understanding that risk is basically, I think I wrote it here. Risk is the outcome they haven't even thought of. And like what that means is like most people, they often try to think about all the different outcomes that could happen, all the different things, and they consider that risk. But one quote I read years ago is like the real risk, like the actual risk, is the things you haven't even considered that are possible. And so that really blew my mind. And I think I've come to experience it firsthand, even like in last year. Like last year I was holding some coins, you know, I openly say, even like Redo, right? Like Redo, I caught that at 2 million market cap. Well, 1 to 2 million market cap. Then went to 140 million market cap. And I was one of the top holders, right? And I got emotionally attached. You know, it wasn't just about the grid and how much money I had in it, but I got attached to the narrative, to the thesis, because it was playing out, right? Technically I was correct. But one thing I've learned is that this space isn't binary. Like nothing's binary in investing and trading. Like it's not all about being right or wrong or yes or no. It's about how long you're going to be right or wrong for, or how long, or to what degree you're going to be right or wrong. Like how far is this coin actually going to go and stuff like that. And so that's what I've come to learn. The space is not binary. Investing and trading is not binary. But yeah, that coin I got invested, I got way too emotionally attached to the idea of it and like how far it could go and should go in theory as well. But that's another thing. Risk is all about reality, right? Like not everything, even if in theory it should happen, means it will happen. You know, so anyways, now that we've got that out the way, and basically, yeah, as I said here, like leaving a moon bag subconsciously keeps you still attached to the coin, which is perfectly fine. You know, it's better to de-risk aggressively but still hold some than have the whole all-in, all-out mentality. Because one of the reasons people never sell anything much is because the idea of selling feels like they're being disloyal, or if they feel like they're doing an injustice. But look, man, if you're selling responsibly, if you're not impacting the chart, if you're still keeping a good bag, then it's fine, man. You know, it's part of the game. You know, no point making money if you can't keep it, okay? So perfectly fine, part of the game. Remind me to come back at this later because this is really, really interesting regarding the US 10-year Treasury yields. But let's dive straight in. Before we get into the actual nitty-gritty of what charts and qualitative data to track, I want to go over some mental notes, okay? Mental notes, because these are very, very, very important to remind ourselves with, okay? And I'll run through this real quick. So first of all, prioritize buying and adding to positions where I have an edge. Anything else, even if it looks great, is not worth the risk. May as well keep it in stable coins and wait for confirmed opportunities. As I said here, never be all in or all out. Always remember the element of risk. Profits are profits. Don't rotate back into the market. Move the profits into stable coins, life savings. When the market is hot, it's max extract season. Most move, if not all, money into stable coins. So basically, when you're taking profits, don't rotate it, man. That's a problem. Most people in the heat of the moment, they don't realize that when everybody's greedy, it's when you're supposed to be fearful and exiting the market. Most people, they just keep to 10. They tend to just keep rotating money into the market. And eventually, when the music stops, you know, when the game of musical chairs stops, they're left exposed and they're fucked. So yeah. It's going to feel wrong every time you sell and de-risk, but that's exactly why it's the right thing to do. You're going against the herd. You're going to feel like you're missing out when you're moving profits into stablecoins and cold wallets, but that's what's happening. You're leaving the game of musical chairs before the music stops. You have to leave while the game is still on. Doesn't matter if you leave early. You're supposed to if you want to win. Impossible to win if you leave the game when the music is already stopped. So again, guys, I'm telling you, man, take this from a fucking 21-year-old dude that's made millions in the space after being here for years. I'm telling you, de-risk, bro. I'm taking it from the heart because even before when I had millions and when I was doing great, I was hearing this from other people, but unfortunately, you really only learn this stuff from experience. And so just, fuck, man, like, please, like, can't stress it enough. But yeah, always think for myself. Don't just accept others' point of view because it's typically the herd. Each people think Power's resignation would be bullish, but meanwhile, we've already been a bull run with him for years. So that's another thing. Don't just be a sheep. You know, don't just adopt the same mentalities and thoughts that other people do. For example, everyone thinks, oh, Power resignating would be bullish. But bro, we've been in a bull market with him for years. So if anything, one idea I have is like, by the time he does resign, if it happens and by the time he does, maybe that could mark the end of the bull run, you know? People think, oh, it's bullish, and it's just the top, you know? So always stick to charts, not to news, okay? Whales and elites love to validate belief initially, so what they say happens, but then they reverse it when it matters most, so at the end. So don't always go contrarian. You need confluence and signs of euphoria. Towards the top is when you can't trust them anymore and you need to go against what they're saying. This time is not different. And so my point here is like, everybody always at the top, they tend to think, oh, this time is different. And the reason people get that mentality is because of all the news that's being pumped out. I'm telling you, it's all a fucking psyop. Don't pay attention. The smart money, the elites, the whales, they know exactly what they're doing with all that news and stuff, okay? At the tops. So I'm telling you, what I'm saying here is like, yes, it's good to be contrarian, but not all the time. Not all the time. It's mainly just when things are extremely euphoric. You know, so right now, for example, things are not euphoric, and we'll get to that in with all the things we're tracking, but they're not, okay? And so just because, for example, I saw on Twitter that the White House made a whole ass video on crypto, right? Doesn't mean that macro-wise, let me just show you real quick. White House, I think it was it was this one. This account. The White House just bull posted about Bitcoin and crypto on their official account. It's happening. La, da, 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 da. This was 19 minutes ago. So my point is, okay, just because... Here's the thing. Here's how they operate. All right, let me explain to you how the whales and elites operate. A good example is Jim Cramer, bro. You know Jim Cramer? Like everyone, you know, it got to the point where everyone was led to believe that everything he says is complete bullshit, yada, yada, yada. Dude, what they do is they program people to start thinking a certain way, but then they reverse engineer it in a way to fuck you up later on. So for example, Jim Cramer, they encourage people like retail, the average stupid guy, to think that everything he says, the opposite happens. Because it did happen for a very long time, the opposite. But, you know, believe it or not, then in April, for example, when the April crash that we had a couple months ago, Jim Cramer at the exact bottom was saying, oh, like you should buy the dip, like buy this opportunity. But most people didn't buy because they don't believe fucking Jim Cramer. They were like, oh shit, we're cooked, la da 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 da. So my point is, one, always think for yourself. Two, always understand that it's not black and white, that it's not always a clear-cut rule. There's always nuance to things. and you just got to connect the dots. And so, as I said here, what they do as a strategy is they validate belief initially, but then they pull the rug later. So, for example, the White House just posted a crypto video, right? And the market's very likely to pump over the coming months, 1-2 months at least, right? And so, well, now I'm catching myself with expected timelines. That's another thing. Always don't stick to timelines, stick to the charts. Because if things were to hypothetically tomorrow 10x, doesn't fucking matter we think time, let's just take profits. And so that's another thing. Let me write here as a note. Forget timing or expectations of timing or expectations. Fuck, man, I can't type. Or expectations of timing. Instead, stick to charts. Forget timing or expectations. Instead, stick to charts. When key levels hit, de-risk. Doesn't matter how long you think is left. Okay, so my point here is like charts matter a lot more than time. Because one mistake I got into, even last year in March when I preferred 20x, because everyone on the timeline and macro-wise, I was thinking, oh, well, we're just getting started, we're just getting started. I was completely ignoring the fact that I was up 20x. And so, and I was ignoring the fact that things were at key levels, things were going parabolic. I was ignoring the fact that it doesn't fucking matter how long you think is left. Like, you got to de-risk, you got to de-risk. So yeah, anyways, cash itself is a position, okay, guys? If you're investing in a coin that's gradually dying and looking shit, but at the same time you can't think of a better alternative to place that money, just because you can't see somewhere else that's better to put your money, doesn't mean you shouldn't de-risk. Of course you still should, because cash itself is a position, stable coins, cash, stable coins. That can be better than endlessly holding a particular coin, especially if like the war on top is in and it's just slowly going down and down and down. If you decide to sell, don't ever be in a rush to make it back, because that's when poor decisions can arise. Don't chase opportunities. It's better to wait for plays where you have an edge, okay? Again, 99.9% of startups, companies, projects, everything eventually tend towards zero. Doesn't fucking matter what it is. So marry money, marry cash, not the narrative or the idea or fundamentals. Make big money and get out. So that's one key thing. There's nuance to it, because you do need to marry a narrative, an idea, and fundamentals to a degree, because initially is when you need to do that. You need to do that when you're finding your entries and then holding through the initial dips and holding through the initial early stages. But bro, listen, when things are going absolutely parabolic and you're sitting on life-changing money, that is when, at that point, you need to marry your life. Like, you need to marry life-changing money, dude, not a project, because there's always the element of risk and anything can always go wrong. Anything can happen, anything. And so, again, nuance to it. You do definitely need to marry like narratives and ideas and fundamentals, because you need the initial belief to make the big money, There's no free lunch. There's no, things don't come to you a silver platter. Things aren't going to 100x overnight, especially with utility coins, for example. So you do need the belief. You do need the conviction. But you need to balance the nuance between knowing when to hold versus when to start de-risking. And de-risking, as I said before, there's nothing wrong with it, especially if you really like a project. It's just smart. It's just smart, responsible capital management, So again, whenever I make big money, which is realized profits, immediately convert 100% to stablecoins and take a little break. Do a meditation, relax, come back, refresh later with a neutral state, because otherwise you'll chase more money and you'll make mistakes. Same thing with losses, by the way, which are also inevitable also. So always follow my profit allocation guidelines. And that's basically just going to be based on the whole de-risking exit plan, which we'll get into, okay? But this is really important, and I'll just go through this for this video. For the future videos, I won't go over these notes unless there's like new things I want to say. But I haven't gone over this yet, so it's good value for you guys. So again, don't rotate. Don't over-rotate either, okay? Especially in good market conditions. That is when it's max extract season, dude. Like, that's when you're getting that easy money, the profits. And look, worst case scenario, if you do want to rotate, keep it very, very short term. My problem last year, for example, is I would rotate money into other projects and then treat them as long-term investments. My logic would be, oh, well, I just made 20x holding this long-term. Let me find another good coin with all of this new money and wait to 20x that as well. But dude, it doesn't work that way. Like, it depends on the market timing. Just because a coin is good doesn't mean that if you rotate into it later on, you're going to make a bunch of money, like long-term. You know, short term you could. That's the thing. Short term, when markets are going parabolic, you might see easy 20, 30, 50, 100%, 200, 300% gains really quickly. But more than that, when things are like the actual 10, 20, 100x moves, that they've already happened by then, you know? So, okay, gradually, aggressively take chips off the table. Move part of the portfolio into stablecoins for cash throughout the run-up. Treat profit sacredly. Remember that we're doing this to change our real lives, not continuously risk imaginary internet money, okay? So don't keep risking your portfolio and staying in the game too long, because the game of musical chairs will eventually stop. Be entirely out before the game is finished, even if it means you got out early and missed out on more money. It's 100% better to actually make it than staying in the game just to potentially make more. Read that again. It's better to 100% make it than staying in the game to potentially make more. I'm going to highlight that shit because that's huge. Like, think about it. Would you guaranteed be set for life? Or would you rather risk being set for life just to potentially make a bit more and be even more set for life? It's like, dude, like, the risk to reward is not there at that point because you're risking giving away everything for something that could change your life. So if you've made life-changing money, why risk to get more? You're risking life-changing money to potentially come back with nothing if it doesn't work out. It's not worth it. Treat your profits sacredly. I'm going to highlight that as well. That's huge. So stick to investments we have an edge. Again, or they're confirmed or they're safe. Having an edge is crucial in the space. Fact of the matter is there will always be another no-brainer opportunity eventually. I'm just going to write that. Eventually. That's the thing. You don't know when. You don't know when that will happen, but it's just the nature of the markets. There's always going to be opportunities. And it's better to be patient and find those rather than force trades on a sub-optimal play. Because even if you risk a small position, you could just end up giving hard-backed profits. So that's another thing. Very often people make a fuck ton of money and then they look at the dollar amount, right? Say it's like a mil, 10 mil, fucking whatever. And then they might tell themselves, oh, I'm just going to throw 10K here and 10K there, 10K there. In their head, it's like, oh, well, 10K of 10 mil, it's nothing. But dude, it's still 10,000 fucking dollars. And so like, if the market timing is good, why even risk that? Why even bother? Like, you're just giving back hard-earned profits if things go to shit. So you really, really need to understand when it's time to put money into the market versus take money out of the market, okay? Especially with timing. So if you really, really, really do want to put money back into the market when things are going absolutely parabolic, you need to treat it extremely short-term. Like, I'm talking hours or days or like 1 or 2 weeks at most when things are already going nuts, okay? I'm serious. So again, all money is important. Oh, no, let me go from here. You're only as rich as your stable coins, okay? A $10 million portfolio or anything like that doesn't mean shit if it's all in coins, okay? So yeah, other than stable coins, not to mention, the best step is money that's actually been poured out into the real world, and then you've acquired hard assets. That's even more important. Again, all money is important, man. All money is important. Treat every single dollar with respect. Treat every single dollar with respect, not just larger amounts. 1K is 1K, even if you have 10 mil. So treat it with respect, because if you don't, it won't respect you back. And it will disappear from your life. God can take anything He's given you. Enjoy some money you earn, but firstly, prioritize it for long-term assets that nobody can take away from you. Experiences in life can be made in the great, but securing your future first is more important. You cannot live how you want in the long term unless you take care of your future in the now. Progress is measured by how quickly I can recognize and correct my should be. Okay, so little interesting life story for me about this part. I agree with this, yes or no. I wrote this entirely myself, all of these things, maybe like, I don't know, I've been writing it throughout the past few months. But I find it interesting, man, because sometimes you need to experience a taste of something in order to want it again. Like, very often the reason people don't chase things is because they don't know what they don't know. And to me, at a young age, having experienced what I've experienced in terms of really, really high class living and travel and awesome experiences at a young age, I know what to look for, and I can almost taste and feel it in my reach, because, you know, if I've had it before, I can get it again, you know. So even years ago, my portfolio was like low, like the lowest it's been. I remember once I went on a holiday that cost like 1/5 of my net worth. And it was absolutely like, if anyone wants to hear that, they'd think it's stupid, right? Years ago, I think it was early 2023, I went on a trip that cost like 1/5 of my net worth, which was a lot of money for me at the time. And the thing is, I don't regret it, because had I not done that, I would have had way less inspiration and motivation to accomplish what I accomplished. So my point is, there's a thin line, again, nuance. You know, I do think it's important to invest in your life first before having experiences, but very often you'd be surprised those experiences can make or break your mentality and what you want in the future. You know, even a little small example, like last year, I was traveling the world purely in business class, like all around the world. And so sure, that money could have gone towards real life stuff, but just experiencing that once for the first time, now, like right now, I know that I want that again. I know exactly that I want that again, and I want that for the rest of my life. And so obviously, yeah, like had I not done that and invested in my life first, sure, that would have been good, but I wouldn't have had that experience to keep me hungry. And so definitely be smart with how you invest in experiences versus assets. Treat it carefully. But all right, now we're getting into the real analytical part. So I hope that was a good little warm up. Things are getting extremely serious now. Okay, let's get into it. Don't rate take profits. Send it all to Tracer for life savings, no matter the amount. Have automated take profit levels set ahead of time. Stick to my fucking rules. Keep your money, don't lose it. Exit gradually and aggressively. Secure my future and my family's, right? Those are my key notes here, okay? Confluence is better, but even just one occurring is serious and requires de-risking. So that applies to everything that we're going to be looking at, okay? But yeah. Exits won't be perfectly timed. Be okay with that. So that's another thing, guys. Very often people, the reason they don't sell the exit is because of their ego. They're like, but I'm not sure if it's the exact top. I want to sell the exact top. I'm going to wait, da-da-da-da-da. That's just ego. I'm telling you, like, it's okay to not tell the perfect fucking to the T. It's not realistic, man. It's just when you have many different signs and signals and confluence, that's when you need to do it. If you wait for perfection, which is just not going to come, reality is it's just not going to come as much as you think it will or could. It just won't. You need to be ready for that and okay with that. For things to not feel right and not feel exactly 100%. You just got to do it, dude. You got to do it. So yeah, you need key levels clearly marked in order to analyze, but you can also just see with the naked eye. So what I mean by that is like, even like this chart, right? Sure, you can have key levels drawn, but you can also just play it by eye. So say, for example, if we see price all the way here, even without Fibonacci expansion levels drawn out and some other random bullshit TA, even just looking at it with a naked eye with no TA, you can still, everyone would still think it's reasonable when prices around here to de-risk. Everyone would think it's reasonable. And so very often people overthink it. That's my point of view. Very often people overthink it. So that note here is encouraging myself to, yes, have things drawn out with key levels, yada, 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 but also look at it with a naked eye. Practice that. Because the human intuition, human gut, surprisingly, is way more effective than you think once you've been in the markets for many years with a lot of screen time, exposure. And yeah, so yeah, better to be conservative than greedy, by the way. Lock your money in, please. Written 24th of July with a clear mind and no grid and portfolio low. So yeah, this is a good reminder later on that these things I was saying is when I had clear mind and I had no greed. And so if I'm thinking other things in the future when I'm up a lot of money, when I read this, I will know that I'm thinking incorrectly. I'll know. So that's why it's good to have a little note like this, you know, to remember how I felt before, to remember all the logical things, because emotions can get in your way. They're bound to happen, but you need to have logic that's overpowering it. So your portfolio means nothing until it's sold into stable coins and cash into it in real life. Okay, let's go. This is it. So the order of the most important things to track, in my opinion, from research that I've done since February. Okay, so that's, what's that? March, April, May, June, July. So that's like 5 months of research, okay? This is the order I came to a conclusion. First of all, ETH, okay? ETH. Second of all, USDT and USDC, okay? These represent stablecoin dominance. And so USDT, I think, is number like 4 by market cap in the world. And USDC is number 7. And just a little quick fun fact, in case you didn't know. And this is after a lot of research, talking to ChatGPT and just, you know. USDT, I've come to learn and realize it's actually... there's more retail involvement here with USDT. Much more retail involvement. Whereas with USDC, it's a lot more institutions and smarter money and whales and stuff, believe it or not. Really, really interesting, but that's actually how it is. You can research that in your own time. So most people track USDT dominance, but for Confluence and for an extra edge, I'm also tracking USDC, okay? And even just upon first glance, like you may notice, bro, look at USDC here, how far it is from like a potential triple bottom, versus how close USDT is. And so just upon first glance, without even going into my notes, the conclusion I came to realize, I'll get into it after, but what this means is retail is actually a lot more euphoric right now than whales. And that's actually a good thing, because what that means is this support is very likely to break and will continue going euphoric. Whereas USDC, you know, it might actually just end up bottoming around here, or maybe we'll just do a 3 drives pattern and bottom around like here or something, you know, here, whatever. So yeah, that's really interesting point to note. But yeah, other than that, bearish divergences between ETH and stablecoin dominance. Also bearish divergence between ETH and others / total 3. And so keep in mind that, yeah, again, it says here, de-risk when. So de-risk when ETH is going parabolic, when stablecoin dominance is crashing, it's at support levels, you know, when there's bearish divergences between ETH and stablecoin dominance, So these are all like factors to look for when to de-risk, okay? Now, for those wondering what others and total 3 is, others total 3, okay, it's actually a chart that represents both. And so as you can see here, the first one is others, the second one is total 3. So this rate basically represents what is the strength of others relative to total 3. In other words, what is the strength of coins out of the top 10, which we can just consider basically small caps, relative to the coins in the top 10, okay? Total 3, you know, because those just exclude, you know, Bitcoin, Ethereum and stuff. And so when this is going parabolic and it's mooning and stuff, what that means is that small caps are actually outperforming the top 10. It's basically what it means, you know? And, well, yeah, if you look at the TA real quick, you'll notice that the previous top in March alt season was when it was at a big resistance level. And then the next one that happened in December, small caps did worse. Isn't that interesting? Small caps did worse in December than they did in March because they were way lower, way less money, I guess, went into it. And so, again, it was at another resistance point. And so what I'm looking for here is a few different options. Obviously, one option is that small caps end up doing worse, even worse in December, and we top around here. But that's why I've written here to have confluence, like to monitor for confluence. You know, I've set my alerts. By the time things are here, I'm going to be looking at everything else on the list, seeing if I think that is a macro top or just like a short-term reaction, you know? Because there's more possibilities. There is a possibility that we pump to an even stronger resistance, which is not here, but here. This is a pretty strong resistance. Also, even if things go absolutely nuts with alts and a lot of liquidity flows into like alts, and that's the thing, like top 10, it's like there's such big caps, man, but things other than the top 10, out of the top 10, they're basically alts, they're small to mid caps, you know? So there is, again, the possibility that we go absolutely nuts and pump all the way even to around here. And it would make sense too, because while everyone's waiting for a parabolic breakout, we just do an even lower high again anyways. Like this would still be a lower high, funny enough. It'd still be a lower high, and yeah, so really, really interesting. So yeah, I've written here to look for bearish divergences between ETH and others in total 3. Also de-risking when this itself is actually pumping and yeah, resistance levels. Also, we're going to be looking at Google Trends, okay, Google Trends. So these are some important words that I'm going to be tracking, you know, buy crypto, how to buy crypto. These are all words that retail obviously look at and stuff, right? So all these words here, also these words about exchanges and stuff, all these words about meme coins, and even this kind of sentiment stuff. And yes, that's another thing we're going to be tracking, Google Trends. We're also going to be looking at Coinbase app download rankings, okay, whether it's in the top 10 of finance, top 50 overall, top 1 overall. And so these are some like exit signals here, right? So, you know, am I looking at the right thing right now? Yeah, I am. So, yep, Coinbase app downloads, right? We're going to be looking at that. We're going to be looking at Fear and Greed Index. Now, as I've written here, we can look for bearish divergences between Fear and Greed Index and ETH. And we can also look at whether it's been an extreme greed for an extended period of time. And honestly, when things are in extreme greed, even like a week or like at least 5 days is still really meaningful, you know, because sometimes it's there for a very short amount of time. Here's another interesting thing that I'll note real quick. Fear and greed, here's the thing, fear and greed on CoinMarketCap, it's actually overlaid with Bitcoin. I'll show you right now. It's actually overlaid with Bitcoin. But as I said here, okay, ETH is going to be leading the market outperforming Bitcoin. So what that actually means is the fear and greed index moving forward should honestly, in my opinion, actually be tracked with the ETH price rather than Bitcoin. One thing I can't remember honestly is how the fear and greed index is calculated, but by memory, it actually has nothing to do with Bitcoin itself. The reason most people usually compare it with Bitcoin, at least here on CMC, is because Bitcoin's the biggest coin by market cap. But what's going to be leading sentiment for the rest of the run, especially alt season, it's going to be ETH, not Bitcoin. So while most people are looking at Bitcoin and Fear and Greed, we're going to be looking at Ethereum and Fear and Greed. So that's going to be our edge. And so a bearish divergence, for example, would be Fear and Greed going down while ETH is going up or sideways. You know, that'd be a sign of weakness. Because obviously if Fear and Greed is going down, which is sentiment going down while price is going up, that's usually a sign of distribution, and it's usually bearish. But there's actually examples where it can be bullish. So I'll get into that as well. I'll get into that. But yeah, so obviously there's no Bitcoin here. So what we'll be doing for that is we just put Ethereum here. We go on the line chart. We just zoom in and then we just look at it here. You know, we just, for example, like, you know, we just look at it visually, you know, the direction. That's the thing. You can look at the actual discrete value, which is like the actual numerical value, but you can also just look at the trend. You can see, for example, from here it's going downwards, you know, for example, from the 18th, and then from the 18th, you can actually hear it's going upwards. So yeah, really interesting, isn't it? We're going to get into it. We're going to get into it. You'll see. Yeah. So, okay. All right. So we got that. All right. More. We have Bitcoin dominance. Obviously, we have others dominance. We have others / BTC, which is basically how small caps doing relative to Bitcoin. That's still going to be useful, right? Yep, that's really interesting actually. Looks like we're getting compression for a big run up. We'll see. But yeah, other than that, we're also gonna have Ethereum, BTC, ETH dominance, total 3, others total 2. We're gonna have Coin and MSTR. So Coin represents Coinbase. We're gonna be having MSTR, you know, MicroStrategy. What else here? We're gonna have SPX for like macro confluence, right? The stock market. We're gonna have the VIX just so we can see the actual overall macro market, like how risk on versus risk off they are, right? We're gonna have the DXY, the dollar, the US dollar, and yeah. Other than that, we'll have a few more. So we'll have average Ethereum transaction fees that we're gonna be monitoring, and so this is really undervalued, you know, underlooked one. I saw someone make a tweet on it many months ago, and I found it really interesting because it makes sense, right? If Ethereum fees are absolutely mooning, then that means ETH is very overheated. So right now it's actually very quiet, and we'll get into it. But yeah, so it's very quiet. But yeah, as I said here, more than $8 is you have to be cautious. More than $20 you have to be euphoric. Like it is euphoric. You don't have to be euphoric. Sorry, like it is euphoric. Also, we have the Bitcoin MVRV. Here's the thing, guys. Listen, these are from CoinGlass. But here's the thing, CoinGlass, they give you like 20 or 30 different indicators to look at. Dude, I'm telling you, I researched all of them. I backtested all of them. I talked with ChatGPT. I did a lot of research, bro. I'm telling you, only like 3 or 4 of them are actually useful. I'm telling you. The rest are absolutely garbage, pointless to look at. Seriously. So, yeah. I've done a lot of time and effort, guys. So I'm telling you, if you just stick to everything that we're going to be tracking here, you will not lose, okay? We will not lose. So yeah, Bitcoin MVRV score. We're gonna have the ALTSEASON, you know, the altcoin season index. We're gonna have the price cycle top indicator. This one's been very accurate over the past. And so before we actually dive into the most recent tracking that I did 2 days ago of how the market's looking, let's look finally at a few more qualitative notes, okay? First of all, shout out to a guy called Threading on the Edge. Shout out to, where is he? Where is he? Shout out to, here he is. So shout out to Threading on the Edge. He does like a couple times a week, like a macro report. So for example, here a day ago, he was giving all the main news, like US, Europe, deal criticizing Europe, tariffs, like all the like main news that are relevant to crypto and also the macro market. He puts it here. So that's great. That's one thing we're going to be looking at. We're also going to be looking at a tracking sentiment list on X. Okay, so on X, I made a list where I track sentiment. And what I added here is basically, how do I look at it? Tracking sentiment. What I basically did was I added a bunch of like mainstream news and media accounts. Because these are what retail's looking at. Retail's looking at Michael Saylor, Bitcoin, looking at Robinhood, CoinDesk, Cointelegraph, all the mainstream news accounts like Walter Bloomberg and stuff like that, Coinbureau. So I added them to tracking sentiment because that's going to be really valuable data for where sentiment is when things are going nuts, you know? Wow, they got rid of it? Wait. Okay, so they basically banned insider stock trading, like people from, from the, what's it called again? The Senate or some shit. It's trading, but the thing is, as this guy said, they all still have other people that can do it instead of in their legal name. So yeah, there's still going to be loopholes for them to do it. This doesn't really mean shit. So yeah. Anyway, so it's going to be really valuable looking at the tracking sentiment list on a weekly basis because you'll be able to see what the sentiment is of the average retail person just by looking at the news, by looking at the comments, even what people are saying and thinking of it. So that's going to be really valuable. Other than that, we're going to be looking through TikTok, YouTube, and Instagram to see how many views and engagement crypto videos and comments are getting. We're going to be looking at news and events and mention stuff through a retard, average, retail, normie point of view. And from there, we'll do what a whale would do, okay? And so that's a key thing. Most people, they look at news from a very surface level, face level point of view. But you need to look at that way more deeply, okay? Way more deeply. Because that's how you have an edge. If you don't see things how everyone else sees it, that's your edge, okay? So always think, what would a smart whale be doing right now? Whenever you see events occur that seem like it will attract many people, it's often just an exit liquidity play by whales. Look at the different niches having trading view. Different ones popping and dominating can signal what part of the market we're in. When the most retarded retail-heavy ones like memes or gaming or metaverse start mooning, it's a huge euphoric exit signal. So that's another thing, guys. In my trading view, I actually have a list of all the different niches. I have meme coin list, I have AI tracking list, I have a gaming tracking list, RWA, Deepin, because reality is, and we can even see it now, different sectors will pump harder at different times, depending on what part of the cycle we're in, So even just a little glance right now, it seems like RWA is performing a little bit better than gaming, right? You can see gaming doing a bit better than AI. Yeah, it's just good. It's just good to track because here's the thing, guys. Here's the thing. We're all on chain here, right? We all have coins on Ethereum chain, Solana chain, even like on BNB, some of us. But we also have coins that are in different niches. We have coins that are in the AI niche, we have coins in gaming, coins in RWA. And so what's important is to actually look at the leaders of that niche, because what can often happen is throughout alt season and throughout the cycles, different niches top at different times. It's not going to be as easy, I don't think, in my opinion, as everything topping at the exact same time. I mean, it'll happen to a degree, but not as easy as everyone else expects it to be. And so that's why it's good to have tracking everything separately, because you may be holding a gaming coin that's mooned 100x while your other coins haven't mooned yet, or vice versa and stuff like that. So yeah. All right, huge volume days are an exit liquidity opportunity from the holdings, especially volume days. So one day, for example, when Ledger has 4 million volume or 10 million or 10, let's write like another crazy one, like 20 million volume, which is the most it's ever had in a day. That's a de-risk opportunity. So my point is with any coin, okay, any coin that is, always de-risk into strength, okay? Always de-risk into strength because otherwise you're going to be fucking up the chart. So always be smart with your exits because that's how you can also protect the chart for the rest of your holdings and for everyone else while also maximizing your upside. So other than that, when the masses seem to really respect and care about crypto again and absolutely die hard love Trump again, they'll basically be the top. Right now, it's starting to happen. People are starting to like Trump again in crypto from all of the news and stuff that they're doing, but definitely not the craziness yet. When very important players like CZ are tweeting bullish stuff when prices going into parabolic and resistance areas, treat markets with huge caution, de-risk into the strength, sell into the FOMO. So what's a good example? Bro, CZ at the 19th of Jan this year, you know what he said? And it was like 2 days before the top, mind you. He said the FOMO is only just starting. How bullshit is that? He said the FOMO is just starting. This was 2 days before the top. So, to think I used to be stupid enough to see bullish tweets like this and never actually believe it. I actually did used to believe it. So that's just nuts, man. So as I said here, like 4.4 million views, but they're all side on the side. 4.4 million views, but they're all on the same side of the trade. Yeah, that was never going to work out. So my point is, dude, if everyone is seeing the same thing, if everyone is thinking the same thing, if everyone is doing the same thing, not everyone's going to win. It's the nature of the markets. Not everybody's going to win. Most people are going to lose. Okay, one way or another. So don't get sucked in, okay? Treat the public views of elites and mainstream media, etc., as clues for what they're actually telling you is happening right now and coming soon. Again, look for events that genuinely blow your mind or hugely surprise you. Events that can't believe are happening, find absolutely hilarious and are ridiculous. For example, Peanut last year, a coin about a fucking squirrel, hit 2.4 billion market cap. It was getting shorted by Elon, Trump, etc. So like that alone is insane. Like, you know, like when you're seeing stuff like that, it's just so euphoric. The markets are putting so much money into stupid shit. That's how you know it's getting very euphoric. Then Trump launched his own meme coin, bro. It pumped massively, and this time again, the masses were made to believe that retail was about to enter. That's a narrative that everyone was saying. So again, think for yourself, dude. Is everyone saying the narrative is retail is about to come? Well, maybe that means where the fucking retail? Maybe that means they're not about to come, you know? The fact that Trump put it on his fucking Twitter, and the fact that it hit 70 billion, dude, retail's not coming. They already came. Retail are the ones that pumped it, you fucking idiot. So yeah, that was huge exit liquidity. That was a huge top signal. In hindsight, obviously, like me personally at the time, I didn't see it. But now I'm starting to see the game from a different point of view, a different lens, a different angle. One that involves nuance versus all binary and black and white. And now, another one. If big exit liquidity events occur, like huge rug pulls, like Octopus Wallet. I don't know if you guys remember Octopus Wallet last year. I was their CMO. I took it myself to like 20 million markup alongside all the influencers and people that were onboarding, whales and stuff. And the team, the devs, completely rugged it. So that was really fucked up. I lost like $550,000 Australian, which I think is like 300k USD, so pretty fucked. But yeah, when stuff like that starts happening, like crazy rug pulls, crazy exit liquidity opportunities, that means euphoria is in. And so, and the reason, you know, euphoria is in is because people with excess, like, what did I write here? People have excess liquidity, which means coins are reaching ridiculously valued valuations. All of Octopus Wallet, okay, wait, I did not word this that right, well. Okay, so what this means, what I'm saying here is like, coins are only reaching ridiculously overvalued valuations because people have excess liquidity. So if coins are reaching valuations that they really shouldn't, what it means is people have more money than they should. They're all about to give their profits back. They're all about to lose it. So yeah, all for example, this project had, Octopus Wallet, was previews and a bunch of influencers promoting it, and it hit 18 million markup for 2 weeks. You know, that was in March last year. But yeah. Also, Zach XPT exposing recent big exit liquidity scams or pump and dumps. That's a good, you know, close to top signal. Crypto memes and videos all over social media. A good reminder is, it's just a random tweet. It's a good reminder. Be emotionally ready for fake blow-offs. Some small caps will make new all-time highs as others crash. ETH may hit new all-time high. People scream 20k next. Your bags will tempt you to hold just a bit longer. Stick to your levels. Don't hold because of vibes. Have automated TPs. Walk away when hit. There you go. Common mistakes to avoid. Don't wait for confirmation after USDC hit support. Don't assume a blow off top means all your bags will pump next. Don't get greedy because TikTok influencers say 10k ETH is coming. Every final push will feel different and make you question your plan. Your bag will tempt you to hold just in case. Don't fall for influencers, meet up or lead tweets. That's actually liquidity bait. There you go. Oh bro, this is so good. All right, now we're getting to the actual, this is it. We're going to get into what's happening. So first of all, de-risk when ETH is going parabolic at resistance or at Fibonacci expansion levels. ETH has not yet done that. So like short term, ETH has gone absolutely crazy. So short term, we could technically look for a little retrace. But, you know, mid, long term, macro, I guess like high time frame, it has not gone parabolic yet. Parabolic for me would be when it finally clears all-time high, you know. So yeah, and again, we always need to monitor for confluence. I mean, my first alert is all the way just at 5.4k, you know, which if hypothetically that was the exact top, that wouldn't even be parabolic. That would be a joke. Like if we just top tier, that'd be max pain. Honestly, it'd be kind of funny. It'd be kind of fucked up. And so my point is, always be fluid. Okay, don't just expect one particular outcome. Plan for different ones. In fact, one thing I'm gonna do is I'm not even gonna write TP4, 3, 2. I'm just gonna write TP. Because having different levels to TP at implies that you're waiting for them. So I don't want to do that. But you can prepare for it if it happens, but you don't want to like plan for it, if that makes sense. So I'm just going to write TP instead of TP 1, 2, 3, 4, you know. Because for example, say the market top was here and it started looking shit and bearish. You might be thinking, oh, but TP 2, 3, 4 never came. It doesn't fucking matter. Like the market looks shit, looks top, just sell. So yeah, always be fluid. People are starting to have more belief in ETH in the upcoming alt season. That's one thing I've noticed. But other than that, yeah, I think we're still chilling, okay? I think we're still chilling. You know, we had a triple top on ETH. We formed a range here. We had a deviation here. We entered back in the range. We broke above the mid-range. We're consolidating at resistance. If anything, bro, I honestly think a lot of people are waiting for a pullback here, and it will just never come. It will obviously be hit eventually, probably in the next bear market, but probably now, given how quick this move has happened, and we're consolidating resistance, it's possible we just break out from here, leaving a lot of people sidelined. Okay, so next, USDT dominance and USDC dropping out support levels. If both are at key levels at the same time, de-risk. De-risk separately, but also when both are at key levels at the same time. So my point is, you don't have to de-risk when they're at the exact same level at the exact same time. You can de-risk separately. Because as I said, USDT, it's going to hit a triple bottom way sooner than USDC will, you know, which is really interesting. But as I said here, USDT overall looks bearish and still has space for more downside and form a triple bottom. And given how weak it looks, a breakdown is possible. So yeah, it would make a lot of sense. Like USDT dominance does look pretty weak. And so, you know, pretty weak, just looking at it, like, for example, here. Like, let's just look at it like this. Like, this looks pretty weak, you know. It'd be way different if it was an inverted head and shoulders, and we could have, like, a, you know, shoulder, head, shoulder. But given this lower high we made here, it looks very weak. I would think it's, like, yeah, a breakdown from here. So, in terms of the levels that I've marked on USDT, let's see what I have marked here. So, first of all, I have a 3 drives pattern marked, which is basically... So this level could make sense. Also have some confluence and some Fibonacci levels. And also not just Fibonacci levels, but previous support levels, resistance levels, you know. So as I said here, like USDT below an orange line, like which is a key level. USDT below a key level. Key level does not necessarily mean that more downside is coming, because it could just be a week. So say you see, let's say we see the price here and then it's dropping a lot like here. That doesn't mean we're just going to suddenly crash all the way here. It could just be a wick, or it could just be a deviation. And so what that means is that you always got to de-risk no matter what you think, okay? It doesn't fucking matter what you think, just de-risk, okay? So as I said here, it makes sense for USDT to bottom at the so-called area with any moves below being wicks. It could just become a classic 3 drives pattern while everyone is expecting a huge breakdown. It never comes. So that's the thing. You got to think from everyone else's point of view. So again, it could make sense potentially. So what do I have marked here? I've marked here as like potentially, you know, 3.6%, which is still very far from where we are now. So yeah, that's probably like a conservative case scenario. I wouldn't say it's like best case or worst case. Worst case is probably around here, 3.87 and 3.83%. That's been the actual absolute overall macro top. That would probably be worst case scenario. Conservative case would be here, and best case would be anything around here, honestly. That'd be best case. So USDC looks way more bearish compared to USDT in the sense that it seems way more like a falling knife. So as we we're looking at before, USDT is already very close to being at the support levels, whereas USDC still looks like it has a lot of room to crash. And so, as I noted here, which I'll show in a second, what that means is that whales haven't actually started rotating yet, which is good. Whales are still being very patient. And it makes sense because whales always win. Whales are always the one that accept the best timing. And so it could be a sign that retail is in disbelief. Retail thinks the top is in potentially, or retail thinks we're euphoric when whales don't. Let me just show you these notes real quick. So USDT dominance, as I said before, it's typically retail inflows and outflows, whereas USDC is typically smart money rotations, okay? So as I said here, don't blindly just sell at any level. Like do so. I mean, I don't love this. I wrote this, but, well, no, ChatGPT gave this to me, actually. I don't love it, though, because you should de-risk, but you also need to watch for confluence. So take this with a grain of salt. Like, I do think you should blindly de-risk at the key levels, but manage and monitor for confluence. Because, for example, say, I'll show you what I mean. Say here on USDT dominance, I've written here to ensure that 20% of the portfolio is in stable coins and cash. That's cool, but you need to learn to be fluid, because what if we're here and it looks like everything is absolutely topped? Well, then obviously you should de-risk way more than just, 20%. You know what I'm saying? So take things with nuance, okay? But other than that, A drop in USDC means that market cap is ballooning, alts are flying, whales are exiting. Okay, that's what it means. Whales are exiting. Stablecoin dominance shrinks because alts outpace everything. That's why it would be happening. Whales rotate slowly and quietly. And so as you can see here, like USDT has been crashing very quickly. That's who you'll notice. You know, it's been crashing very quickly. Whereas with USDC, I mean, the fact that it's so far from support levels means it hasn't really happened that quickly. You know, they're still not euphoric at all. So that's good. That's actually really good. Okay, that's really good. Yeah, there you go. So let's go back. Alrighty. So whales haven't started rotating yet. That's good for us. Potential reaction areas and ultimate bottom shown here. So it was potential 3 drives pattern as well. So yeah, this could be a conservative bottom, as I said before. Worst case scenario would probably be around here, 1.3 and 1.29. It's probably worst case scenario. It could be like a high low and then just continuation upwards. Conservative case scenario here, if anything, this is probably a good case scenario because this is very far from where we are now. That's probably a good case scenario, not even conservative. That's probably, yeah, a good case scenario. Reaching like around here. Yeah, that's good. That's good for us, man. That's good. So bearish divergence, which is a sign of weakness between ETH and stablecoin dominance. So macro uptrends have been behaving normally. You know, long-term ETH has been going up while long-term stablecoin dominance is going down, which is what you would expect. One thing I noticed on the short term, which I found interesting, is that on the short term, ETH, and keep in mind, this is from 2 days ago, but it still applies. ETH made a high low, okay, while USDT did a high low as well. And so USDT doing a high low means there's actually more money exiting the markets. So in theory, when price goes up, USDT should go down because more money is entering assets. What this means is more money is entering ETH while more money is exiting markets. And so at the same time though, USDC followed the convergence. It's actually followed what it should do, which is if ETH is going up, like assets going up, USDC goes down. And so the conclusion I came to was that given that ETH is at a resistance area, one can assume short-term downside. But given that USDC is dropping, which is whales and smart money buying, while USDT dominance is rising, which is retail and cautious money selling, this could actually form a powerful breakout to the upside with many in disbelief and unpositioned. It's as I said before, like ETH is consolidating at resistance levels. There's probably a lot of people that think this is going to end up being a resistance again. There's just so much like trauma and fucking panic at these levels. And while retail is potentially exiting, or like the more, you know, it's not just retail, obviously. Like treat it with a grain of salt. It's not just retail, but USDC is generally more for whales, and the fact that it's showing convergence, it's a good sign. It's a good sign. So this could be a very classic setup where there's a lot of disbelief and we just keep sending up. It wouldn't make sense. All right, bearish divergence between ETH and others in total 3. So ETH is obviously ETH. Others in total 3 represents the strength of others relative to total 3. I heard a weird noise. I don't know what that was. Anyways, so what I noticed is that ETH has been making like, you know, high low, like on an uptrend, whereas others in total 3 made a lower high. So a bit of a downtrend technically from here to here, because up and then down here. So here's what ChatGPT and I came to conclude. So what that means is that there's still a trend intact, because there's still high lows. That's the thing. There's still a high low here and here, as you can see. But the fact that ETH has a high high while alts have a lower high, it means weakening breadth. So what that means is that not all coins are following ETH, at least not yet. So what that means is that there's not full market confidence yet. Capital is flowing into ETH, but not trickling down to alts. Smart money may be focusing on ETH, which is safer risk-on exposure, rather than high beta altcoins. And beta in the sense that they're riskier. Okay, that's what it means. Just write that here. So, implications is, if ETH keeps pushing alone, but total 3 and others doesn't break out, it's an exit liquidity phase. Whereas if ETH breaks out and others eventually follow, this was just delayed rotation. So that's what I'm expecting, honestly, because this chart does look very, very, very clean. So worst case scenario would be around here, but it is very clean. Like it could break out very well and enter a full-on bullish uptrend, because that's the thing. It's been a bear trend this whole time. This has all been a bear trend. And so once we clear above here, that is technically a bullish market structure. I might make a little note of that, actually. So above here is actually a bullish market structure now. Above here is bullish. Trail higher lows. Trail high lows with stop losses. So obviously, although I'm not trading this itself, if this ends up really representing alts to a good degree, well then, as long as it keeps doing high lows and is an uptrend, we can keep riding our bags, you know, so that's really good. But yeah, this isn't all been a downtrend. If we break above here, that's a bull uptrend now. So yeah, overall, I do think this is most likely. It's just delayed rotation. I do think alts will start moving. I don't think both will start rolling over. No, like rolling over just means they both just top and then just start going down. But I highly doubt that. Highly doubt that. So yeah, let's move on. Others in total 3 pumping strong. Yeah, as I showed you, it's still far from reaction points and resistance points. First one is probably 0.33, 0.34. We're still far, you know, we're still far from these key levels. So I'm chilling, we're chilling. All right, Google Trends. Let's see. So these are the scores for the 12 months. So let me just show you, like, for those that don't know, let me just show you how Google Trends looks. All right, so I'll just show you how I did it. So let's say crypto bull run. Crypto bull run. Let's do worldwide. Past 12 months, so we can have a good idea relative to the past previous top. So the previous top was, you know, November, December. It actually did a lower high, interestingly. The market was higher by December, but it did a lower high, so that's really interesting. And this is when Trump got inaugurated, and look at this. Look how much lower this was here. So that's another thing, like, just because, this is a good mental note for myself and something for you guys to keep in mind, just because the Google Trends is lower, okay, relative to where it was at other points in time, doesn't mean it's just getting started. It could just mean it's a bearish divergence. Because if price is high while sentiment is lower and there's less retail exposure, that's basically just distribution, okay? I know it's a bit weird, it sounds a bit confusing. That's why we obviously need confluence, and this is just one of them. Like, it's not like this is one of the main things we look at, but it's still really valuable to look at. So anyways, crypto bull run, the highest it's reached recently is 34. And so obviously for a macro top to be in, you'd want 100 ideally. But that's the thing, guys. We can't expect to sell the exact top, because say we're looking for 100 back when it was here, and then we saw 100 and then we de-risked aggressively. The market still kept pumping in December and even into January, you know? And so one thing we got to keep in mind is never be all in, never be all out. You know, never exit everything either entirely. Like, de-risk slowly, like de-risk, like not slowly, but like de-risk reasonably, so that you still have exposure, but you're also managing risk. Okay, it's a fine line. But yeah, so that's literally all you have to do. You put in the keywords here, you look in the 12 months and worldwide, and you see the score. You can obviously look at lower time frames, and that's if you want to get more pinpointed. So for example, say you see it on the 12 month at 90. Okay, but then you zoom in to the past 3 months and you see it's at 100, right? You see that the past 30 days is at 100. You see the most crazy news just come out. Fucking Trump just launched a coin, Then you know that is probably actually a really good time to exit. So again, you're never going to sell the exact fucking top, all right? Get that into your brain. You're never going to sell the exact top. So yeah, other than all this, but well, yeah, these are the scores I got, okay? These are the scores I got 2 days ago. So 34, 47, 32, 47, 100, 95, 44, You can see these all here. So on average, like, it's definitely not, you know, in the high 70s or 100s, but it's also not low either. Like, we're getting there, you know, like retail's definitely starting to enter, I would say. So here, if the market is already near or at all-time highs and Google Trends is falling while price is climbing, that's a bearish divergence. It can mean that hype is fading, retail is exhausted, and the final wave is over. The final wave is over. So this is especially dangerous for alt meme coins because they depend heavily on fresh retail flows. So once interest dries up, price can collapse very fast, even if, yeah, this is huge to write. Yeah, this is huge. So once your interest dries up, price can collapse fast, even if ETH or BTC is holding. What that means is ETH and BTC is a lot more institutional, obviously, right? So what they're saying here is, like, even if they're mooning, even if ETH and BTC is mooning, even if they're in an uptrend, even if they're holding up, that doesn't mean alt meme coins will moon or hold up too, because a lot of them, the majority of them, are way more retail driven. And so if sentiment and retail, you know, exposure and involvement is dropping, well, then that's a huge red flag, because what new money is going to pump in to pump the coin, you know, to pump the price? Nobody. So yeah, keep that in mind. Other than that, well, yeah, based on that, by the way, I gave all the data to ChatGPT. I calculated all this myself, and then when I gave it to ChatGPT, what it said was, we are in the late stage optimism phase. So we're nearing the disbelief to euphoria transition. So that's the thing. So we're not even in disbelief yet. We're just going to enter it. Disbelief, in my opinion, will be once ETH breaks out. People will not believe it. They're going to be like, oh, what? No way. Like, oh, no, 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 no. And once we start hitting probably a new all-time high, like probably around here, that's when the euphoria will start. So I'm expecting from here to here, if it's hit, right, 8.4, it's going to be extremely quick. That will be euphoria. And I wrote a little note here, okay? Pay attention to this. So many news articles and media and retail think 10K is coming. But it would make sense if the top was, for example, 8.4 or even 9.7, but I haven't even highlighted it in orange because I just don't think it's coming. But 8.4 grand would make a lot of sense because, well, everyone was waiting for 10K, which seems very close to 8.4. It seems like it. But it would make sense if it never came because everyone's waiting for it. So exit beforehand during parabolic PA. It doesn't matter if it's here. Just you got to look for confluence. People are going to think that the sideways that happens after the parabolic top is consolidation for the next leg. In reality, it's going to be distribution, okay? If you notice, like, the actual... for example, lots of people back here thought it was accumulation before the next leg. But no, it's just distribution because we pumped here and then people use the lower highs and extra opportunity, you know? And so my point is, once we do go parabolic, definitely expect some sort of consolidation and ranging and holding up. People are going to think it's bullish. People are going to see high lows. They're going to see a high, like a little like high. They're going to think, oh, okay, now the next leg is coming. But really, it's just distribution. So anything below 9.7, 8.4 is a sell, in my opinion. De-risk. Huge dumps will not be a buy the dip, in my opinion. They're just going to be caution signs, and you should de-risk upon retests. And so let me show an example here, like back from the past. So many people saw this dump and this dump as buy the dip opportunities. When in reality, say you hadn't sold and you were like, fuck, I should exit. What you should have done is waited for a retest of like a previous key level. So even like this previous key level would have been fine. This previous key level would have been fine. You know, even here, that was a perfect one for this week here. So my point is, worst case scenario, absolute worst case scenario, say you haven't really sold much and then ETH has a crazy down candle, right? 20, 30% here. Let's even look at 2021. I'm pretty sure, well, I mean, this was 2021. You can't really compare fucking 2021 with nowadays. Let's look at the end of the cycle though. It's a better example. Here, right? Say you saw this huge dump and you didn't sell. What you do is like, oh, fuck. That's probably it. Sell the retest, bro. Sell the retest. Okay, sell the retest. And yeah, sell the retest. That's what I'm saying, okay? Sell the retest. And yeah, we're going to enter disbelief and euphoria. So disbelief is probably around here and here. Then from here onwards is euphoria. That's what I think. Blow off still coming. Likely 1 to 3 months window max unless cycle breaks. That's what ChatGPT said. This one's really, really interesting because one thing I came to realize, bro, is like everyone is talking to ChatGPT about the market, about finance, about crypto and stuff. And so ChatGPT can't really lie to you. It really just depends on the quality of the questions and the actual prompt to give it. But always take it with a grain of salt. So the fact that ChatGPT is saying likely 1 to 3 months window max unless cycle breaks, I find that really, really interesting. I've learned to be a big skeptic and critical of absolutely everything. Doesn't matter who it's from or what it is. So yeah, that's just a little interesting thing to know. All right, Coinbase app download rankings. So Coinbase app download rankings. Right now, wait, I was connected that whole time, right? Fuck me. I hope this has all been recording. If it hasn't, I'll kill myself. Yeah, so right now we're top 15 in finance and top 225 overall. So nothing crazy yet. What it does suggest is that we're in the early to mid stages of the growing hype. Retail interest is clearly rising, but not overheated. The market may be priming for a stronger leg up, especially if ETH breaks out cleanly, USDT rolls over, and Google Trend starts pushing past 60-90, 50-60. So yeah, we're in a good position, man. We're in a really, really good position. All of our like small caps are looking prime. Let's look at them real quick. I might just combine this into a Drae's portfolio report video as well, like just go over our holdings. But everything's looking good. You know, Ledger has been pumping a lot since since what's it called? Since, well, I started, you know, working with the team. I've been pushing it since the middle of this range. I've been buying up a bit on the way up as well. And yeah, we're looking absolutely primed. You know, we're close to all-time high. It's a very clean chart. It's very, very clean. You know, we had the clean downtrends. Now we're in a bullish uptrend. It's probably going to be up only, honestly. The chart is having a lot of signs of strength. There's not much sell pressure. So yeah, that's looking good. ALEA, let's see ALEA. So ALEA is in a bullish uptrend. We do want to see a close above here though, because as I said in previous videos, like lower high, lower high, lower high, lower low, lower low, lower low. Then here we did a higher high, which is good above these. And then we maintained high lows, which is good. Okay, we maintained a high low here, you know, high low, high low, high low. What we want for confirmation is basically a close above here and here. Once we close above like 80 cents and 90 cents, once we close above there, it's genuinely going to be a crazy like U-shaped recovery, like V-shaped, V-U, whatever you want to call it. It's going to be that. And as you can see through TA, this is actually very similar to Ledger in the sense that they've just purely been building for like a year straight, like, you know, a year and 5 months. They've just been building this entire time in a downtrend, in a flag formation, just like Ledger did. And once it does break out past, you know, past 90 cents, as I said, it's going to get nuts. Like, just like you saw with Ledger, where it's about to go absolutely nuts, it's going to happen also with ALEA. And ALEA being a gaming coin, being such a small cap right now, it's going to happen a lot more violently. And yeah, it's going to be insane, you know. I'm very, very, very bullish on ALEA long term, just like I am with Ledger. I really believe in the team. I really believe in the actual product that they're working on. I always tend to prioritize teams that focus on the actual tech and product first, because then everything else aligns when they start to focus on it. Like, there's no point marketing a product or a service or anything if it's not optimal and ready for scale yet, you know. And so yeah, ALEA's in a very similar position to Ledger with that, in my opinion. Yeah, they're both primed, you know, both primes. HEDGE, still holding HEDGE. HEDGE is about to break out, honestly. Like, I mean, it already has since I started, you know, working with the team. I joined around 500k market cap, I'm pretty sure. I've been chilling for a few months. We're definitely in an uptrend, obviously. It used to be like lower lows, it used to be lower highs. Now we've been doing higher highs and higher lows. So it is about to go like absolutely parabolic. You can just see here like this curve formation starting to happen. We reacted perfectly at the previous all-time high. So that's going to be a very strong resistance. So once we flip that, oh my goodness, once we flip that, it's off to the races. So really bullish on HEDGE. Let's look at our Captain BNB. Captain BNB I really, really, really like. I've done videos on it on the past. I did an interview with one of the CTO leads. Look at that later if you haven't already. Yeah, I'm very, very, very bullish on Captain BNB. That's an interesting wick we got here. Not surprised though, not surprised. Yeah, that's such clean PA, man. So clean. But yeah, BNB has been hitting all-time highs as well. I got that on my list. I got that on Chains tracking. Because as I said before, for every single small cap, mid cap, whatever that I have on chain, I also compare it relative to the actual big cap. For my Sol coins, I compare it relative to Sol. For my BNB coin, I compare it relative to this. And so for BNB, like one thing I've noted here is it could make sense if we end up topping around here. It could. Because for example, we can either front run 1,000 and we top here and everyone's like, oh fuck. We can also hit 1,085 and everyone's like, oh my god, we crossed 1,000. Now we're going to 1,000, you know, 500, 2,000, 3,000, and then it never comes. Another option is things do actually go even more nuts than I expect, and we do cross this big resistance level, and we go to a blow off top around 1.2, 1.3, which would still make sense with the previous thesis I was saying, which is like people start seeing these prices, and which is when they start calling for 3K, 5K, 10K at 1.3. Because 1,000 is a very psychological number, right? So if they do cross 1,000, people are going to think, okay, now that 1,000's here, now it's time for 3,000 or 4,000. And meanwhile, the top, that never comes. You know, that never comes. So, you know, even to here, we 36%, to here, we 66%. I think it's very reasonable if you do end up topping around 1.3. I think it's very reasonable. It's 66%. BNB is like top 5 by market cap coin. So it would be a lot of money flowing into it. So yeah, I think that's perfectly fair and reasonable. yeah. So BNB, you know, they're the number one meme coin on the chain. So I'm very, very bullish on Captain BNB. I really like it. I really like it. It's a long-term hold for me. Long-term in the sense that, you know, it's not a trade. Like, obviously, I have levels where I'll be de-risking at, but yeah, we'll see. Other than that, we got Gary. I've done a lot of Gary posts and videos since what, like 500k market cap. So that did about a 10x for us so far. I'm still holding a bag. I mean, yeah, it did go kind of parabolic. So it does look like it needs some more time to consolidate. Does look like it. Let's see here. What I like is that the team is very clear. Like, I can confidently say that the team is here for the long term. What I also like is that the downtrends have been very, very healthy. Like, with most meme coins, you'll notice that the actual dump is very, very, very aggressive and suspicious, I guess you could say. But this is very, very normal and calm. Like, this is very calm price action. That's fine. So yeah, I'm still holding a bag here. I'm perfectly fine with holding for some downside before upside. Same thing with ALTS gas. Let's have a look with the ALTS gas because short term, it did lose a bit of structure. You know, we were having before high lows, high lows, high highs, high highs. And then here we lost structure. And so I was thinking like, okay, should I de-risk and then consider buyback lower, or should I just hold through the expected downside? And so the answer for me was it depends on the context of the market cycle. So because things haven't actually gone parabolic and euphoric yet, and we can confidently say that based on everything we're tracking, it is reasonable to just hold through this and not take the risk of missing out potential upside, which we know is coming. It's not worth the risk. It'd be very different if we were all the way absolutely parabolic, absolutely nuts, and then by here, then we start having similar signs. Then it's a lot more reasonable to aggressively de-risk. But in times like these, when the market looks so primed, and not to mention catalysts coming and stuff, I don't think it's worth de-risking. Even though short term, we could very well drop. We might not, but we could. Yeah, I've been working with ALTS gas for the past 2 years. I've you know, keep in mind, this is V2. They were actually launched, whether you knew it or not, before this in like July 2023. So I've been involved since V1 early on. I really, really believe in this team. I really respect everything they're doing. I do think this can hit like $5 to $10. I do think so with all the support they're getting, direct backing they're getting. And yeah, I mean, we'll see what's possible from there. But one step at a time, you know, always take things one step at a time and keep tracking things, keep monitoring things. But yeah, I really love ALTS gas. Huge respect to the team, what they're building. Really proud to be involved here. What else have we missed? Control, so alt control. Let's see here. So we do seem to have found a bit of a floor here. That's cool. We found a floor. Chart, honestly, like aside from this dump, which I just didn't love, it was a sell the news dump. It was very, very, very aggressive. But other than that, I actually really do like this chart. I actually really do. Let me add a support level here. Wait, oops. Yeah, let's do that. I really do like that. Let me delete this. That's a mid-range there. I'll delete that. Let's draw a line here. Let's do that. So this is a key level to flip. This is about the mid-range here. This is the resistance level. And then from there, we'll just de-risk along the way up. But yeah, like if you zoom out, you know, and you go on high time frames, it actually is a very beautiful chart. Like this is the type of chart that you want to see before expansion. It's sideways for a very long time, you know, for 6 months, more than 6 months sideways. They're still building, team's still around. The dev actually messaged me, I think today or yesterday, so I'm going to check the message, see what they said. But yeah, I really do like alt control. You know, these guys, if you haven't watched my previous posts and videos on them, they're a decentralized, you know, DEX for stocks. Like what's it called? Like a stock DEX, which is pretty sick. It speaks for itself. It's this decentralized exchange where you can actually trade stocks. So that's really, really cool. Definitely look into them. Yeah, I'm really excited for this one. Low volume, low market cap, but I do think they're legit and stuff. So yeah. Other than that, we've gone through that. We got YAFA. YAFA I've been supporting since 10 million market cap since last year. I called it around here. Straight away, we did like a 4x, went to 40 mil. We've been consolidating. Long term, I see this as a huge wedge, like this. Ready? And then like this. So it does look like we'll very likely do this, you know. That's what it looks like. It does look like we're going to break out very soon. 20 So really excited for YAFA. YAFA is a beautiful program, man. This team, I've met them in person. They're amazing people. Oh, they're restricted. But they're basically Palestine's first digital currency, and that's actually huge when you think about it. There's millions and millions of Palestinians all around the world. In the actual country itself, they don't even have a currency. And so this project goes beyond finance. It goes beyond the movement. It's really making like an actual impact in the lives of many people. So it is a really beautiful project to be part of, helping, you know, the men and women and children of Palestine in these difficult times. So huge respect to what they're doing. And yeah, there is a lot of smart money involved in this. As you can see, liquidity and the market cap is very healthy, very strong. There is a lot of smart money involved in this. I have been hearing a lot of things behind the scenes in terms of the funding that they're receiving and the plans, because their plans go beyond just being a currency as well. I'm not sure how much I'm allowed to say. I don't think they've announced much. But it's more than just a currency, yeah. So you'll see. They're cooking a lot. They're building a lot. You'll see. So really proud to be involved there as well. And HBT, Hypebots. So I actually haven't officially mentioned this in a video yet, but I am, my friends, involved with this project heavily, okay? I have known the founder and, well, yeah, the founder especially. I've known him for years. He's one of my day one since I very first joined the space in, 2022. You know, the space in terms of like small caps, mid caps, you know, the CT space, the CX space, you know. And this founder has been working on this for like the past like 6 to 12 months. And they finally launched just a month ago. And this looks absolutely primed. I'm really, really happy to be working with these guys involved here as a marketer and advisor. And I still don't want to say much, you know. I'm going to leave this video as a bit of a tease because I'm going to be doing a dedicated video for this later on. Definitely just check out what they're actually building and the tech, because they are the future of Web3 marketing, and they're combining that with AI agents. And so, yeah, it's really, really exciting, man, because they're going to end up being multi-platform, multi-chain. And it's just, this coin, like these guys have big actual goals. Like most projects that are small caps, they're like, yeah, we're planning this, we're going to do this and that. The reality is they usually don't. But take it from me, guys. I've known this dev, the founder, for a very, very long time. He's built a very strong team around him. I've had countless meetings with everyone in the team for months on end in preparation for this coin. And so, yeah, I mean, 116K market cap, 1.7K volume. This is stupid early, like dumb, stupid early. So very, very, very excited. This will moon, in my opinion. Check it out, okay? Look at their, join the Discord, look at the website. I'm not sure if the light paper is on the website yet. I've looked at it myself. I'm not sure if it's there yet. But, man, I'm super excited, okay? So, yeah, look into that. And there's my portfolio update. So now that I've done that, let's actually move on with the actual point of the video. This is going to be a long video because we're going to cover, you know, as we just did, my actual holdings right now. And the actual things I'm going to be looking at to de-risk. So yeah, other than that, let's look at the fear and greed now. So fear and greed, the score itself was 63 2 days ago, which is greed. What I found interesting though is that from the 18th of July, it dropped from 71 to 63, while ETH went up from 3.5K to 3.8K. So what that means is that retail excitement was waning. But based on other confluences though, wait a second. No, I worded this wrong. So usually this is a bearish signal, is what I'm trying to say. But given other confluences though, given that retail's in disbelief at this resistance here, I think we might blow through it. So what this means is that it's actually confluence. It's confluence because the other things we've looked at so far show that, well, if there's that resistance, retail doesn't really believe in what's about to come. They don't. And that's good, because this fear and greed shows just that, because although price has been going up, sentiment's been going down. So we might actually just end up blowing through, and then the fear and greed index will follow. So yeah. BTC dominance next. So BTC dominance, we've been looking at this for quite a while. I had drawn up this like curve a very long time ago. I think I first drew it here. So it's funny because when I saw the breakdown in November, I thought I was about to get rich, right? I thought we were about to drop to all these huge key levels, you know. So I was like, yay. But nope, it was just a fake breakdown, because then we retested it. And here we finally broke down. So it is fair to say that we've officially broken down and into the bear trend, because this was all an uptrend, right? Even here, it was still an uptrend technically, you know, like from these key levels. And so for me, like, although we've lost the recent key levels, which means we're in a bear trend, which is good for altcoins, I would say for absolute confirmation, would want to drop below here. I think a drop below 55.9 would be great. Do I have that marked? I don't actually, but it's a Fibonacci level right here, so it makes perfect sense. So we have this level here, we have this level here as well. I might just draw a little line, because why not? So once we drop below here, we're definitely going to fall all the way to here, in my opinion. It's just a falling knife all the way here. I do expect a reaction, so I do have written here to watch the market. If we do keep blowing through, here is where I definitely want to monitor a lot, because this is probably one of the most crucial, important levels where I would expect a reaction, because look how often it reacted here. Just look, 1, 2, 3, 4, and then here. So yeah, definitely around here is a huge key level to watch. That said, on high time frames, like, I do expect us to just break below that anyways, you know, like I would expect that, because I mean, this has been an uptrend since March 2023, man. So fuck, like the fact that we finally broke it, so strongly, like we were going like this, and then with such a huge candle, we broke. So once we lose this level here and here, I do think it's fair that it's just a downtrend, like, you know, something like, you know, okay, this is a really bad line, actually. That was a horrible line. But the whole point is that during alt seasons, it's very quick. I mean, notice here, look at this. Extremely quick downtrend, extremely quick downtrend. Where's 2021? Yeah, extremely quick downtrend here as well. You know, and another thing to note, guys, is that you don't also necessarily need BTC dominance to be crashing for it to be good for altcoins. You can also just have it ranging sideways for it to be good for altcoins. Because if you notice, in 2021, there was a bit of rotations with alts. Not all alts in the second half of the run all ran together. It was a bit of rotation. Up to around here, right? December 2021 was the final top. But that top looked a bit different to May 2021. And I remember, because I was invested back then, just not in the CX space, but I was just like in altcoins and stuff. And different coins ran at different times. Some had second legs, but a lot of them didn't. And so my point is, you don't necessarily need it to be crashing. Like, a lot of people here might have thought, oh, it's all over. But just ranging is still great. So we could expect that. You know, we could expect for us to crash. Maybe we eventually crash to, say, I don't know, let's say here. Wait, no, it's a really bad line. To say here, and then we just go sideways. And then, you know, we move. You know, that could make a lot of sense. You know, that could make a lot of sense. So yeah, it'd make a lot of sense. So my point is, we could still be having very profitable movements for alt between this point here, okay? So that's something good to keep in mind. What next? Currently, it's in a small range, 100%. We're in between this range right now, so we can expect a bit more ranging here. All right, others dominance. So others dominance I found really important, just from, you know, back testing just the previous highs. We can obviously expect the others dominance to keep dropping throughout the years, because Bitcoin and Ethereum and the bigger caps are only just going to be growing and taking the majority of liquidity. So it does make sense for this to keep making, yeah, like lower highs. It does make perfect sense. Nothing that wrong with it. It's just the nature of how the market is now. And so I do have marked here as a really big key level, because, you know, we do have this very obvious resistance line, 1, 2, 3, 4. And it's also a lot of confluence with a horizontal level and also with the Fibonacci levels. So a lot of confluence there, even with a one-to-one extension. Like, this is what I love about TA. You can just have so much confluence, like from here to here, right? Here to here, which is like what you call the pole. Then one-to-one extension that also leads around here. So a lot of confluence here. I have an alert set as well. So a lot of confluence TA-wise here. I want to refer for external confluence too, though. All right. So I have a lot of TA confluence here, but also need to monitor for like the macro confluence, like everything else. All right, BTC, sorry, others and BTC. So this one's very similar to others dominance in the sense that I do expect it to just, you know, Well, actually, would this one drop over time as well? Because this isn't a dominance one. This is just about what's outperforming. Yeah, so in theory, this could, you know, absolutely moon, right? But again, I would expect a lower high simply because of all the confidence we have. Like, this is really big key level here. It would be a resistance touch of the downtrends. Also Fibonacci levels. Also 1-to-1 extension. So, yeah. I think around here makes a lot of sense. Yeah, I'm just gonna like just gonna do that. There you go. There you go. That's the thing, it doesn't need to be perfect, right? It doesn't need to be perfect. ETH and BTC, this is obviously a very obvious one that I have right here. This is a very obvious one. I love how ETH and BTC is looking right now. I really do. Obviously, yeah, it's interesting, isn't it? Because in March last year, right, in that top that we had, ETH BTC wasn't really going parabolic. And then in December, the last top we had last year, it wasn't going parabolic either, it was here. But now that we're fully into an uptrend, right, like this was all a downtrend. Now we're finally into an official uptrend. Like we cleared above that high here. Like this is support now. So like it's bullish market structure above here too. Bullish MS above here, market structure. So like it's looking really, really strong now. Like extremely strong. Probably more than people actually understand. And so given that, like although there's a lot of confluence for reactions here and here, in theory, I mean shit, let's go on high time frames. Yeah, I don't know. We'll see. We'll see. Like there is a lot of confluence for reactions here and here in this box as well. Question is, will we fly to like, you know, above here? Will we fly above here? I don't know. I honestly, we'll have to keep tracking, monitoring. Regardless of whether we think it will or won't, we need to de-risk at these key levels. That's the whole point of de-risking. But it's just something interesting to keep in mind. Yeah, really, really interesting. So we'll see. Other than that, you know, yes, we have ETH dominance, total 3, others total 2, These are all here. I've done TA on all of them, you know. ETH dominance topped means liquidity from retail is now flowing to riskier, smaller sized assets. Market top is here or imminent and short is scaling out heavily. We have total 3, we have others, we have total 2. And yeah, I've done TA on all of them, you know. Everything's about having different probabilities mapped out, you know. Everything is about different probabilities. So others, for example, like there is a bit of confluence here for a lower high, right? Thing is, we're already kind of close to it. So like, I don't know, like, will that be the actual top? It's only 32% away. So like, that's probably worst case scenario, right? It's probably worst case scenario. Beyond that, we have these levels here though, which I haven't drawn yellow lines at. I should, but these aren't really that key of charts. I still have them here, but they're not that key, you know. So total 3, I've written here, like, could be the top, depends on confluence. Whether the boxes are wave 3 or wave 5. Because yeah, I also like Elliott waves as well. I do Elliott waves for like my TA and stuff. Also, I have coin. So let's look at coin. Yeah, so Coinbase just hit a new all-time high. It's a sign we're getting close to the end of the cycle. Given that the rest of the market looks to have a good amount of room to run, I think the must-hold level for bullish continuation level, I think it will hold. So like this must-hold level for continuation, I think it will hold 381. Let's look if it still is. Yeah, it still is. So I do expect this kind of area to hold purely because it's you know, the market's still looking good. I think when it starts going parabolic, this will cause retail to flock into crypto, and like poetry, that will just mark the top again. So I did see news recently that Coinbase partnered with BlackRock, and interestingly, that news happened at support, which probably means they're trying to get buy pressure in, which is a good sign, you know. It's a good sign. They're not doing it as exit liquidity news, they're doing it as support news, because right at a key support level. So yeah, I do think we'll see continuation. I did have this box drawn out ahead of time a while ago. It hit perfectly here. Now I think the next box might be here. And it makes sense because while people are screaming for 1,000, it never comes. A lot of confluence here with the fibs. Also psychological numbers wise, it's, you know, decent. 718 to 810. People looking for 1,000, that never comes. Also, it still would be parabolic from here. Like if that was to hit, that's still 100%, dude. So 100%, for a stock this big, it's a huge deal. So it definitely would cause a lot of euphoria in the market. SPX is really interesting for me. Really interesting because let me just tell you this here. So stocks doing good is good for crypto, but this V-shaped recovery is going to remind a lot of people of COVID-19. It will. It's going to remind a lot of people of COVID-19. And so when you start seeing similar narratives like free money stimulus checks or lowered and low interest rates, money printing, etc., it's going to be a bait to retail because they're all going to remember what happened in the past, which was 2020, 2021. They're going to be like, oh my God, like last time happened, it was bullish. And they're going to do the exact opposite, you know. Like those events will happen likely, like printing money and stuff like that, lower interest rates, but people are going to think it's just the start when in reality it's a top. So last time these bullish macro conditions happened, when it was the bottom of the market. But by the time we start seeing, it's going to be the top, bro. By the time we start seeing all those actual things, which haven't happened yet, like the rate cuts and this and that, it's going to be when the market's already parabolic. So it's going to be a very different context. And that's why I'm already monitoring for very soon to be the top because, well, soon in terms of like, you know, just 7% away. I think 7%, the S&P from now is still quite parabolic. It is still pretty good. And from the bottom, I mean, let's see from the bottom how much that would be. Because you have to think about it, like all these insiders are up huge. That's going to be like 40% gain by the time the top is in, which is still nuts, you know. But yeah, so as I wrote here, like these fib lines are always very respected. The long-term ones that I drew all the way back in 2023 from this pivot to here, it was big resistance level here. This was support as well, became support here. Then it was resistance here. And now it seems to be a bit of a resistance here as well. So yeah, the fib lines are always very respected. So it wouldn't make sense if this is the top, which is 6.785. Then again, we have a lot of confluence here inside the box. I'll show you here. We have a lot of different Fibonacci lines around here between 6.6 and 6.9. I do think a 6.9K top would be quite comical and it would make sense. I mean, Bitcoin hit 69K in 2021. So maybe the S&P hit 6.9K this top. It would be very comical, would be elites fucking around with people, would make sense. It's also in the box. Okay, it's also in the box what the top could be. So I do think the top is actually coming very soon. Yeah, I think things are really interesting right now. All right, so expecting S&P to top soon, which will make lots of sense alongside crypto. Remember that the top can happen months before or after crypto tops. So treat this one as a macro long-term signal rather than an exact moment. So that's the thing, like just because the S&P hypothetically hits here in say 2 weeks from now, a month from now, 3 months from now, doesn't mean that the crypto top is in exactly at the same time. You know, like it wasn't the exact same time in the December top, okay? Well, kind of was because this was a top for crypto as well here. Interesting. This was a top for crypto here, but then it actually hit another all-time high here. It's really interesting. But let's look at March though. For example, March, the 11th of March was here. This was a top for crypto. S&P kept pumping a bit and then it dumped. So you know what, like we can expect it to be quite similar actually timing wise as well. You know, let's say, yeah. So overall, as always with everything, we need to monitor for confluence and realize that reaching overvalued levels, it signals that the market overall is soon topping. You know, so once we're at these overall levels here, the market's topped. Doesn't mean it can't retest. Like, to be fair, it could always just like hit it and then hit it again, and then dump. Usually that's exactly how it is at the very, you know, premium levels anyways, right? Like they always want as much time as possible to exit and distribute into the strength. So we'll see. The VIX is very important because the VIX has to do with volatility, right? And so for those that don't know, basically a lower VIX means less volatility, which basically means it's more risk on season. And a higher risk means it's more risk off season. So as soon as it touches the key level, we need to monitor for confluence. Remember though that the VIX can stay at these levels for a prolonged amount of times. But sometimes not. You know, like in December here, it only touched it once and then boom. So that's the thing. It could touch it just once or it could stay there for a while. So definitely, you know, again, don't ever be binary. Could be either or. So monitor that. DXY, yeah, so the US dollar, I don't know, like on the daily, it's, I wouldn't even say it's in a bullish uptrend on the daily. I wouldn't say so. I mean, let's look from here, lower high, lower high, lower high, lower high, lower high, lower high, lower high. I think, I mean, yeah, lower high, lower high, lower high here. So technically, you could call this a lower time frame breakout. I think you could call this a lower time frame breakout here. And I'll write a little note of it. Lower time frame breakout. Then again, bro, if you think about it, what could make sense, actually, now that I'm thinking out loud, is that as the S&P is approaching the top, whatever profits that people are already taking, they're putting it into the US dollar. So that's the thing. It doesn't have to happen at the exact same time. To be fair, now that I'm thinking out loud, it could just be the S&P is actually, it could just be the DXY is actually bottomed. It's actually bottomed. And as the S&P continues to top and get closer to those overvalued levels, the DXY just keeps pumping up as people rotate profits into the dollar and de-risk, of course, because the dollar is de-risking, you know. So it could make a lot of sense. It could make a lot of sense. The correlation isn't always perfect, right? So it could make sense. So on the daily, yeah, I'll write here, lower time frame, daily breakout. Thing is though, on like the weekly, let's look at the weekly, like with the naked eye. I mean, it just looks so volatile. It looks so shit. Hey, like we had this whole parabolic thing here. Then we had, oh, you know what this could be actually, now that I think about it? It could be, this. Let me cook real quick. It could be, it could be a deviation on both sides, honestly. Could be this, where it deviated on the high, deviated on the low, we enter the range again, and then we break out from there. That could happen. Honestly, could happen. I know it's getting messy here. I know it is. So I'll delete these for now. It's just something to keep in mind that the DXY might actually be bottoms, now that I think about it. Might actually be bottoms. This is definitely a key level here. Acceptance back into the range. Back into the range. This is definitely a key level here as well. Yeah, I'm not too sure on the DXY, man. I'm not too sure. Let me know what you think in the comments. It's just higher time frame looks pretty shit though to me. Like fucking hell, it looks pretty shit. No? Or am I just crazy? As I was saying before, though, it could make sense with the S&P topping and then this bottoming out. It could make sense. So, yeah. Yeah, shit. Okay, fair enough. Game's game. I mean, we already called the top. I called the top around here in January. You can check on my Twitter. But yeah, I mean, it already crashed 11%, which is a big deal. So, fair enough, man. It already is down heaps. All right, so the rest of my charts on my trading view. I have a lot of charts for the rest of my trading view. You know, I have all the different US Treasury yields. I have different metals and oil as well. I do find it interesting that, what's it called? That uranium. Let me go on uranium. I do find it interesting that uranium is in an uptrend because uranium is you know, it has to be involved. It's involved with like nuclear companies and assets and stuff. So here's the thing. This is a good timing to bring up this post I saw. So regarding US 10-year yields, it looks like it's going to break out soon. And so if this starts going up, as he said here, it could be a new era for commodities, precious metals, and safe havens. It could be that geopolitical tension is very high, which it already is actually, which is why we're consolidating here. And added environmental stress and battle for resources could lead to, well, yeah, crisis, unrest, violence, war. Because the reality is, in order for the debt to GDP to fall, which has been mooning ever since, like, fucking here. It's been mooning, right? Yeah. In order for it to fall, money supply and money velocity needs to fall. And one of the ways for that to happen is it's going to have to be fucking, yeah. It's going to have to be through war or violence or a crisis of some sort. So basically, we can expect things to go to shit, honestly. Because look at this. The 10-year moving average now turning up for the first time in over half a century. Well, that's pretty insane, you know? So, yeah, yikes. Like, that's not a good sign, dude. I'm telling you, that's not a good sign. So, I retweeted it. So, yeah, uranium, yeah. What's this? Oh, no, that's Australian index now. Natural gas. What else are we tracking? We're tracking copper. Copper's down a lot today, by the way. It's down 20%. I don't know what happened, what the news was or something, but yeah. Oh, it was a wick. Oh, and then it dumped again. Wait, what the fuck? Holy shit. Yeah, anyways. What I find interesting with the US dollar potentially being bottomed is that the Chinese, dollar also looks kind of bullish though. You know, it looks kind of bottomed out. Looks pretty strong here. So like, yeah, like, I'm really curious what's going to happen. Let's look at the euro. It's kind of mid. The Australian is at a very key tipping point because it's been just sideways for a very long time. But right now, it's actually just chilling at a resistance area, consolidating at a resistance area. And so, will it want to break out? Or will it crash from here? For some reason, I'm actually anticipating a breakout. I don't know why. I just feel like I'm anticipating a breakout. So yeah, we'll see. But yeah, in terms of all the charts that I've been tracking, because as I said, there's a lot. One thing that I found really interesting was Robinhood. Robinhood is of note because it's been going recently parabolic. And they've been doing a lot of like crypto stuff on their app. And if you just go through the Twitter, they've been talking about it a lot and stuff. So it's at a reaction level right now, right here and stuff, right here and here. It's at a new, all-time high. So we could expect a reaction, but then again, if the rest of the markets are going to go parabolic, it is possible that this just continues to go parabolic, and it may just end up proving to be the signal of max euphoria by the time it's fully mooned. You know, I mean, think about it. Like, it was back in August 2021 that the IPO happened. Maybe Robinhood being topped is a market top signal as well, a sign of max euphoria. You know, by the time it starts hitting these levels, what's that from here to say here? Yeah, like that would be max euphoria if that happens. 2x to here, 220. So yeah, I mean, it's already gone crazy, but we'll see. Something to keep in mind. In terms of the other things I was talking about before, the average ETH transaction fees is only 78 cents. So we're still nowhere near heated or euphoric. The Bitcoin MVRV score is kind of close to overvalued. It's 2.59. But it's nowhere near 5, which is what the top should be. ALTSEASON index was 39 2 days ago. It hasn't hit 75 or over. The Pi cycle top indicator, so in terms of a cross happening, that still looks like it's very far away. But say hypothetically the green line, the 350 daily moving average, was to be a resistance line, the top, that would be 145k on Bitcoin. If we're looking at 145k on Bitcoin, man, let's zoom in. Like, would that make sense for a top? Yeah, I mean, it's close to a 1-to-1 extension of this. Let's see. Oh shit! Look at that. Oh shit! Yeah, 145k could make sense for the 350 for that line. Because holy shit, look at this. A 1-to-1 extension is. Delete that. Look how crazy it is, bro. It's literally 145k on the dot. Oh my goodness. Yeah, so maybe, holy shit, maybe the 350 daily moving average will end up being the top, while everyone's looking for the crossover, which is the 111 daily moving average crossing over, which in the past cycles has been the top. Maybe we'll just end up being the green line, which is resistance. That's crazy. Could end up being cycle top. All right, so important things to constantly be aware of, track in mind. So threading the edge, as I mentioned before. So a few notes here. So things are definitely getting healed with the S&P, consistently hitting all-time high. The ETH ETF inflows outperform Bitcoin shows that the ETH Bitcoin outperformance is starting. Wrecked and useless, which are retarded memes, hitting 540 million shows sentiment is getting heated. The Sol co-founder criticizing memes shows the signaling that it's potentially utility season soon. Crypto funds reaching the biggest 4-week inflows in history shows that we're starting to enter mass involvement. And it's a big headline that will be and is already attracting retail. The fact that Bitwise CEO said the 4-year crypto cycle is dead. is a huge red flag, okay? Because what they're trying to do is just get people to hodl for longer. They're going to pull the rug while everyone else is still looking for the super cycle to happen while they're still holding, and it will never happen. So, yeah. Those are the notes I got based on the news that he said on the 29th of July. So, yeah, man. All these things to tracking are super, super valuable. All right, tracking sentiment lists. So there's been some big recent news in UAE about how banks, how like retail can now trade crypto through banks. That's what these two links are about. This one is, what's this one? What's this one? Power must cut rate by 3 points. Yeah, so what they're trying to do here is over time build the narrative that it's bullish and smart and the good thing to do. It's social conditioning. They've been dragging it on for so long, and the reason for that is because by the time the market's absolutely parabolic, which is I'm expecting it to be when they do this stuff, by that point, everyone's going to be so excited because they're going to think, oh my god, we're already going crazy, but this is just a start because now they're going to cut rates, and then that's when the top will be. So they're trying to condition people to think that's very, 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 very bullish. And depending on how the chart's looking by that point, it could be a huge, huge signal. So, yeah. I went through Instagram and TikTok and stuff the other day, and it was nothing crazy. I wasn't seeing anything too worrying or interesting or incredible on YouTube. I do want to look at YouTube, though. Sorry, I haven't looked at YouTube yet. Let's look at YouTube. I've looked at Instagram, TikTok. Nothing was there. Let's look at, like, just crypto videos here. Crypto. 18k views, 60 save Kevin views, nothing much, man. 60 save Kevin. This was 2 months ago. 2 years ago. Some random girl 2 years ago with 3.6. Let's see what she said. To hold until 2025. Let's see what she said. I'm curious. Oh shit, XRP, GG. ETH. Now, honestly, respect to her. Fuck. I mean, XRP did well, so. Yeah, well, GG. I wasn't expecting that, actually. Other than that, nothing crazy here. Nothing crazy here. Yep. 65k views from Altcoin Daily. Yeah. Got to look at news and events and mainstream stuff from a retard point of view. From there, do what a whale would do. Right now, everything just seems to be heating up. Honestly, we haven't entered the period where everybody's right and everybody's a genius yet. Whales and elite need to give them a piece of winning to make retail think it'll be here to stay. And by the time that belief is really there, that's when they pull the plug. Yep. Yep. So the other day, I noticed that gaming was green while all the other sectors were red. I found that really interesting, and it might be foreshadowing what's coming. That was the other day. So yeah, I found it kind of interesting. I hope gaming as a whole takes off, bro, because, I'm holding ALEA, a huge position in ALEA. ALEA's a small cap, and, I do think that can hit 20, 50, 100 million levels, honestly. So, I mean, the fact that CAR hit 150, I think ALEA can hit, 100. Because, well, even more, like, bro, ALEA is a better game than CAR, in my opinion. Like, way, way, way better. Different league. So, yeah. Anyways. And these are all just notes. All right, last final thing I'm going to go through because I found this extremely interesting. All right, extremely interesting. This is the last final thing. It's going to fuck with your brain a bit, but then we're done. All right. So the SEC has delayed a decision until September 18th. So we can expect a lot of volatility around this time because they literally gave us a date. Okay. So if this ends up being, for example, the top in mid-September, short term, it could end up being a bottom in October, November. Because if you guys want to decode Elon's tweets, because there's a lot of theories that he actually gives decodes through his tweets. I mean, if V3 launches end of year, well then the whole market could run again end of the year. And one of the smartest guys I follow on Twitter called Money Tour, he thinks that Chinese New Year, like the start of next year, is going to be very bullish. So we'll see. Here's where things get crazy though. Here's where things are actually really, really interesting. Let me show you this. Overall, the thesis is mid-September potential top, followed by 3 months down, then bullish again near New Year as predicted by Money Tour. But let me show you this. So to explain this thesis as well, if you look at the Economist published earlier this year, you can see that it looks like a clock and each hour might represent the month of the year. Oh, it doesn't actually say December, January, February, Oh shit, bro. The World Ahead 2020-25, it's a clock, the way it's structured and formatted with 12, 3, 6, 9, 12. Holy shit. So this guy wrote in the months. I thought the article said the months, but no, he did it in. But look at this. It looks like the clock in each might represent the months of the year. If you deep dive, you can see that the images in the months prior to July had their events. Tariffs between China and Trump prior to July. Tariffs between China and Trump. Yeah. If you deep dive, you can see the images like tariffs between Trump, monkeypox. Oh yeah, there was news of monkeypox. Yeah, but where's that? Where's that here labeled? I don't see that labeled here. I don't see anything about monkeypox. Maybe it's this. I don't fucking know. I already circled in yellow the nuclear symbols, which are in May and October. We already had the nuclear war between Israel and Iran in mid-June. Fuck yeah. We already had the nuclear war between Iran during mid-June. You can also see an up arrow for July, green circle. And the pump already happened this month of July. Now I'm October, September, November. You can see big down candles. With a nuclear symbol again, which could mean another nuclear war. Well, or at least a scare. That's the thing. I mean, that was just a scare. It wasn't actually a war. Like, it wasn't an actual war. It's just a scare. So, before you call me crazy from a coincidence article from The Economist, I have more confidence to support this thesis. Adrian Diderman, who is an elite account, which might also be the alternative account of Elon Musk unofficially, is said that Iran will fall in 3 to 6 months, which also fits a timeline we see on The Economist. The Islamic Republic of Iran will likely fall in 3 to 6 months. Oil is still very bullish. Months before this whole war circus we witnessed, I said oil was very bullish with a target of $95 and could go all the way to all-time high. This hasn't changed, and the recent pump and dump we saw oil doing made it even more bullish from an accumulation standpoint. Okay, fair enough. Oil, yeah, okay. There was another thesis I have in mind, was another pandemic. Biotech companies are up 30% since I said Moderna. Yeah, that's another thing, guys. I'm tracking Moderna and CRISPR, mind you. I think CRISPR is very, very, very interesting long term. I think this is one of the fields in which is going to take the world by storm alongside AI over the coming years. So I'll probably will reinvest money into that. But it depends on the stock market. That's the thing. I'll write a little note here. Yeah, I'm very bullish on CRISPR, but got to be careful with the entries by the time I'm trying to get in. But yeah, I'm tracking Moderna because it's completely bottomed. And it's up like 30% from the lows or more. So yeah, not only is Moderna up, but always pharmaceutical companies as well. That's not a coincidence. I'm not advocating for any of these catastrophes to happen, but this is the world we're living in. Unfortunately, I'm only connecting the dots here. Something related to China, perhaps, or Taiwan, because in this Economist they said excise latest purge. Yeah. So overall, guys, this is really fucking interesting. We covered so much in this video. Well done for making it through. If you made it through, let me know. If you made it through the end of this video, let me know, because you're going to make it, okay? We're all going to make it. Doing these kind of weekly loggings and tracking takes a lot of time and effort, but it's going to be worth it, okay? Because making money means nothing if you can't keep it. So overall, super excited. And yeah, let's make it, all right? Let's make it. We got this. Thank you for tuning into this video, and talk soon.